Welcome to the September 15th Advance Report from McGowanGroup clients and NetWorthRadio.com listeners. This week, an absolute melt up on Wall Street. I'm going to show you the different components, and then at the end, we're going to cover some strategy, right? Because this is a sea change in the markets. The first is we're always worried about corrections and recession. But let's look at the data. First off, the equity markets celebrated with a melt up this week. The S&P 500 hitting 6580, above 6580. Now a 13% gain so far this year. Now we go to the Dow, above 46,000 for the first time in history. Wow, that's a big celebration. That didn't take long from 45 either. The year-to-date return is about 10% on the Dow. Well, let's look at the NASDAQ. Whoa, 15%. What happened on this rally? There are two primary factors that I believe caused this that are going to help you make great decisions in the year ahead. By the way, I'm Spencer McGowan, President, McGowanGroup Wealth Management, a team of 10, the team that cares. Thank you for tuning in. And we hope we can add value by helping you make great investment decisions. Now, we also know, whoa, what is this? Oracle, Austin, Texas-based Oracle, spiking to an all-time new high. Larry Ellison, he's going to come up later in the program too, but Larry Ellison actually becoming one of the world's richest men with distance on this spike right here. What happened? AI mania validated a $100 billion contract with OpenAI for Oracle's database center, and at the same time they announced other contracts that were similar. It was an amazing announcement by Oracle, and it tells you that the AI revolution is real and it's adding value. Now, don't be overpaying in this market. We'll get to that at the end. That is the T-bill. First off, the Fed meets on September 15th, right? And we've been saying, when is the Fed going to cut rates? Trump is insulting Jerome Powell. We had a big list of the insults, total fool, loser, Mr. Too Late. And the housing market was a good example of what happened. And we think he doesn't like Trump, so he didn't want to cut the rates. But anyway, with all the pressure applied, now the T-bill, that's trillions of dollars, the 90-day Treasury. What happened here? The rates didn't get cut. It's not even Wednesday, September 17th at this recording. Why does the T-bill move ahead? The T-bill moves ahead every time that I've seen it. If the T-bill goes down, it tells you the new rate. Wow. Why would institutions this week lock in a low of 3.9% on a 90-day T-bill when the Fed's target is actually 4 3/8? Wow. Why would they do that? That actually signals there's real money that is betting for a 0.5% cut because of the jobs market, which we'll get to. Now, what's this? This is the long Treasury market. Look at this, 4.7 on the 30-year. That's down from over 5. About 4% on the 10-year Treasury. That determines mortgage rates. Mortgage rates have already dropped ahead of the Fed. It's so obvious they look slow or worse. Trump had some words to describe that. But the Treasury market's already moved because the Fed is leaky. They're all bankers, they wear suits, they play golf together, and they talk. That's what happens there. All right, but the economy's just fine. Despite the jobs market, right now, Atlanta Fed, who's been our most accurate, that's why a lot of people subscribe to our YouTube, because we're accurate on this stuff, 3.1%. Atlanta Fed goes all over the country, gathers the data, does their calculation, and they're usually right. Economists were forecasting recession back in 22, 23, 24, but we were watching the Atlanta Fed that uses real data. 3.1%. That's 50% more than the average economic growth rate over the last 20 years. Wow, this is the jobs. This spooked everybody and convinced the institutional market that the Fed needs to cut by a half. If they don't, it's going to be a big disappointment, so you might take a little off the table just in case so you have some cash. But look at this. Wow. And this is ADP. Now, automatic data processing does more paychecks than anybody in the country. So they take their data once a week. I trust their data better because there's a big controversy at the Bureau of Labor Statistics. The head of it got fired. They've had 1.4 million jobs revised downward, which is usually their pattern, and they use a stupid method. They send out a survey. You get a letter and it says you got to log in and answer all these questions, and a lot of companies don't do it. Fewer and fewer companies do it. That's a dumb way. The BLS could go across the street to the IRS and say, how many people are paying taxes right now because they got a job? And they anonymize the data like ADP. They're not intruding on anybody's privacy. And Elon Musk could have probably solved that in about 10 minutes. Wow. So they're going to fix that. But what does it mean for your portfolio? Well, first, McGowanGroup Wealth Management, we love to think in terms of investment categories, asset categories. Yes, there's asset classes, there's more of those, but categories, high cash flow, that's global lending. Net present value of future cash flow goes up when the comparison rate, T-bills or Fed funds, goes down, right? The cash is worth more in the future if the rates are lower. Inflation was confusing this week, but by any measure, it's below 3% already, and deregulation may even take it lower despite the tariffs. Safety and income. We're building tactical safety in the portfolio with the best possible yield and some upside from the future potential rate changes. Now, growth with income, that's dividend companies. That's where our energy infrastructure is there. We were pounding the table on this channel back in 2020 when you could buy pipelines so cheap, they were just dirt cheap. Wow. And other dividend companies, especially international at this point, are very attractive at low multiples. Now, tech is still there. It deserves a place in the portfolio. That's growth with innovation. But don't be totally exposed with a company that's 100 times earnings. Take a little off the table, get some tactical safety. That's the way we manage. Every week, our investment committee meets and we go over candidates for additions, deletions, and actively manage the portfolios as a fiduciary. You can find us at networthradio.com to set up your Zoom meeting or come down for an office tour. Thank you for tuning in. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You could see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the longer play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.